Hi, Warriors. Dollar's bouncing a little bit. I don't think the low is in. I'll show you in a minute. Also, what a great pattern in play by Blake in the S&Ps. Huge down day yesterday. Congratulations to the team. Hiya, Mike. Hiya, Blake. Hi, K-Man.
Morning, Coach.
Bran. Hey, Blake, how are you?
It's
Uh,
Thursday, baby, and my son graduated high school. I have no more high school kids in the house.
well, you'll have college kids now.
Right. Yeah.
Well, that's all right. You go visit
On to
them
the
on
next.
campus. Yeah,
Yeah.
so the next stage, they're still your boys. They'll always
That's
be your
right.
boys, bro.
That's right.
Um, all right, so let's take a look at what's going on around here. Any big news releases today?
PMIs, European PMIs. We have for later today, we have weekly unemployment claims. We have a tips auction after the 20-year yesterday.
Yeah,
Markets are going to be focused on auctions now and the S&P's at its lows right now.
okay.
And the dollar's
Um,
getting hit.
okay, dollar, yeah, it's up about 12. I look at it like this now. This pretty important area. It's 250 points from here to here, from 101 and a half to 99. So subtract 2.5 from here, and it gives you the target that I had before. I knew I could do a subtraction from this first wave down, which gives you about 96 and a half, which takes this out by 100 points. Still think there's pretty good possibility that we're going to get there. Maybe we get there early in June.
It,
Also,
I
go
was
ahead.
gonna ask you, have you seen the 10-year and what's happening in like,
Oh, sure.
yeah, I mean, we're and TLT's breaking lower, looks like, it's ugly out there.
Yeah, I think Pinkert talked about the breakdown was going to
Pinker
happen.
did.
Yeah, so I don't know where the bottom is, but someone told me that follows Grega that he's looking for a buy coming up here in the notes. I think about a point lower, and that was yesterday. So if you want to see what Greg is doing with rates, join. He's got a pretty interesting count in there. Uh, we have the gold silver ratio moving up. K-Man said if it's going to 110, that means something bad is going to happen. Well, it looks like it's on its way. Canada still looks weak to me. I don't think it's finished. You have like a little flag here developing, just a bounce. I think we're going to take these lows out by plenty. So I think you could stay short the dollar, buy the dollar on weakness still, because we're not there. And yeah, TLT, and here's the 10-year. The only thing I would point out on this 10-year, I heard people talking about maybe 470. Um, we're not confirming these highs here yet. And TLT is. So the longer duration, well, it really isn't. But I don't know, Blake. I think, after I saw that last positioning in the treasuries, I think this could be the last hurrah before we get a real sharp bear market rally to shake out some of the bond bears, unless you could just throw away everything that has to do with technical analysis, sentiment, positioning, because the market's just broken, and then your charts don't mean anything. Um, but you would think that Besant would be looking at this right now and be pretty frustrated. Let's see what happens. But
He coined himself, as he entered this administration, the ultimate and the biggest bond salesman in the world, and which he
oh
is,
yeah,
and he's obviously not succeeding right now.
yeah.
So
So we'll see.
good
Yen
luck,
is
good luck selling and slopping that shit around, buddy.
yeah, it's not going to be easy.
Not an easy task. Not an easy
Yeah.
task at all.
So okay, let's get to S&Ps, and then I want to get Ryan and Kay, and yeah, they're down 16 right now. Um, a lot of people talking about this gap would be the most, when I look at some analysis and some people talking about it, some people are saying it won't even get here. So, I mean, there's a lot of bullishness right now in this market. The greedometer is on greed. What a switch in a month. Breadth is confirming up here, so it wouldn't be normal to have a crash with what breadth is doing, but I guess we're either going here or here. Maybe into early June as well. So let's get to the team. Good morning, Ryan.
Morning, sir.
What are you doing here?
What am I doing here? Not a lot at the moment. Not very much at all. Because
Okay.
we're just waffling around a bit today.
Yeah.
It's another day. We've had 2-3 days of dollar weakness, and then all of a sudden we've got a bit of strength coming in. And so it's just for me, it's just a bit of level assessment, see where the next levels are going to be showing up, what's broken and is now holding, and what's holding that is now broken, sort of thing. So
like euro up pretty good in a couple of days, and giving back 20 is bull market action to me. They're just giving back a little. I'm with Blake on this, and think that we're going to challenge and even take out the size before it's over, if I'm right about 96.5 on the Dixie. So you doing anything with Canada or Aussie or cable?
I'm losing money in Canada. I lost money in Canada because I had a level 38, 60, 70 was a big level, which were those prior highs end of April, beginning of May. And we came down to there. We held it for a little bit, had a long, I nicked a few pips out of some of the trade, and then you can see those two candles where it blew out to 138, and now it's messing around the area again. So yeah, we've been saying it. You got to take profit while it's there on the table and reduce your risk as quick as possible in case it flips on you. You had Aussie dollar up. We still cannot get above 64.40 and hold it for any length of time. And that range is tightening up now. So we're not even getting we're not even getting the extensions down to 63.50, 65. So
it's got to resolve here pretty soon.
Something's going to happen. Yeah.
I think it's going to resolve to the upside with the dollar going to new lows, and then there'll be a good short around 66 or so is kind of what I'm looking for. But this is what Ryan's talking about. We're starting to coil in here, compress. It can't stay in this range forever. Okay.
Yeah, you can probably take that back a bit to the early May high, 65, 10-ish.
I like the sharper angle here.
Okay, but, your charts, mate, your rules.
I just, and my hand would shake taking it back there. So, anyway, thanks, Brian. Any comment on risk and what's happening there? Just a little correction in an ongoing bull market.
Well, everyone's watching yields, obviously, and particularly Japanese yields. We had a Bank of Japan member out overnight, pretty much brushing it all off, saying it's not a problem at the moment. They're not just going to step in and any old move unless it's a financial stability move in yields. They don't see a problem, which I'm not sure that's going to calm the market any which way. It's more likely going to give it a green light to go and try and push the Bank of Japan's buttons and see if they can get a reaction out of them.
Yeah, I mean, when you talk about taking it when you have it, I think this was the close in silver yesterday.
It was a long overdue.
I want just long
overdue.
What?
Development, right?
What?
This one.
Oh, silver? Yeah,
no,
I'm just
Japanese yields.
Oh,
I mean, what did he expect would happen?
Yeah, I'm sure they weren't surprised, but the market seems to be, or the market's,
I find that weird. I have to tell you.
Yeah. What do you have a view on the yen here, Steve? Looks pretty ugly still.
Yeah,
we going for 140.
It looks under pressure, and it looks like it has likely more to go.
Okay.
And having to do with Japanese yields, They might have made a very, very big move, but I think potentially there is a lot more to go. If people think that this is, expensive, I think they're due for a big surprise.
Okay, so let me ask you this. Can you explain why it was a big deal for the US dollar yen to unwind last August, and that this decline in the yen, the market seems to not be bothered by it. Is it because there's
Why
less people
should it be
using it?
bothered? The yen was extremely cheap.
Yeah, but I'm saying that last August, though, when they unwinded the yen carry trade is what I'm talking about.
Yeah,
So now you have higher rates on the yen,
yeah,
and you have
and
a
I think a lot
stronger
higher can
yen.
come.
Yeah, so why doesn't that have an impact on the market like it did a year and a half ago in August, or a year ago in August?
I, I mean, first of all, I think that the yen had reached an extent that it was
Here,
uh,
when it
cheaper,
did this, we
uh,
had
cheaper, cheaper than it's positive for it to be, right? So I think it got to the point. There is an extent at which you can depreciate a currency and talk all about its positive effects. It's not like that. You know, if by having a cheap currency everything was beautiful and perfect, then everybody would race to the bottom, which in some extent they're doing, but after a point it starts becoming more of an issue, right?
okay,
Because don't forget that I mean, yeah, you're a producer, right? You're exporting a lot of stuff, but it's not that every stuff you create using your own extracted materials. You have to import some things, right?
yeah,
And you have to pay your currency to get that. So I think the yen was extremely underpriced. I also think that what was extremely underpriced were Japanese yields, right?
yes.
And they might have moved substantially, but I think they have the potential of even doubling from where we currently are. So people should strap on for a much bigger ride potentially.
Implications for other markets outside Japan on that? Is it going to create any problems systemically or any other way?
I don't think in the short term there is, there is such a possibility.
Okay. All right. Thanks, bro. Nice to hear your voice.
Yeah, as
How
always,
you
nice to be
doing?
here. I'm
How you
good. How
doing?
are you?
I'm good. The antidepressants are working today. Yeah, I knew
Mine
you were
as
gonna
well.
laugh at. Huh? All right.
Mine as
Thank you.
well.
Thank you, science.
Yeah.
Anyway, so let's bring Kay in. So Kay, how are you today, man?
Hi, Dale. Hi, Dale.
Huh?
Hi, everybody.
What about your
Anyway,
antidepressants, Kay? Are
he
they
doesn't.
working today for you?
Yeah, that was very funny.
Anyway, we're giddy now. So, Kay, I just wanted to ask you, like silver, like that was a great trade, but if you didn't book it, it's
Yeah,
gone the next day. I mean,
yeah,
hard to hold for a position
yeah.
in anything.
Mhm. Yeah, that's what I was saying as well. I mean, we've broken up. We've broken up. We even confirmed through 33 and a quarter, but
Yeah,
just tagged the prior high and then reversed. And then you saw, well, actually, what we've seen here is just the dollar coming back. There's some. That's what I said on the flow show as well. You have those kind of inflection moments and
points.
prices, and I guess that's what happened just in the short term, where you saw the dollar the dollar rose versus everything, right? Oh, barring the yen, of course, barring the yen, that's a different story. But the dollar went up against everything else, and all of a sudden that correlation, higher yields, lower equities, drove some people back into the dollar. But I do believe it's temporary, for one, and now we need to just see if levels that were broken before hold. So to come back onto silver. Um, you know, we've been speaking about it a lot of times, and if you look at things like those higher yields in the dollar, the less risk doing less well for at least a while, you get those kind of reactions.
I
I don't
like
know.
this level. I'm still waiting for this level here in
Mm,
silver.
yeah,
It
why
was
not? I mean,
61.8 of
yeah,
this.
yeah.
I think I'll try it. I mean, it's still a
Mm,
couple bucks
yeah. I'm trying
away.
to be extremely patient. I've got traded my ads around, folded some into the long term, and then just wait for things to develop. I did think that it was a positive move going through that 33 and a quarter, but then looking at the yields and what the equity markets are doing, it couldn't hold up there. And isn't not a story of everything that's going on or a lot of stuff that's going on right now? You break, you things are seemingly going, and then all of a sudden they stop and come back, and that's the story of FX in
Well,
within the bigger moves. That is the story. We had the break above the highs a couple of times yesterday in the cable, and it didn't hold. You had the fresh high on the last couple of days in the euro dollar, didn't hold. You did the same thing on the Kiwi, didn't hold. Same thing on the Aussie, didn't hold. I mean, everything is just trading the same with like slight different sensitivities
magnitudes.
towards risk, but basically it's one big pot, you know.
Okay, so the one big pop we've been talking about since the markets changed in
Mm,
February
mm,
was that a weak dollar is now risk on. So
right.
we started this weak dollar last Monday. It took until yesterday for it to catch up with the S&Ps, but
Yeah.
the dollar and bonds have been going down together. So perhaps what we're going to have is finish off this dollar decline. And even if you're a bear, this is 5, and that's going to end this whole wave that we've had, and there should be a correction. So until the dollar bottoms, I'd be careful with long equities. Maybe the dollar bottom and yields happen around the same time. And how about this? Dollar makes a new low, and because of the strength of this rally in indexes, we get a wave two. We don't make new lows like we did when the dollar was making new lows here. We just correct, and maybe it could be deep. How about 61.8 back of this rally? I think that's what do you have, Blake? 52 or so for 61.8 back of this rally?
Um, oh well, I actually let me look. I was actually looking at the long end of the curve here, but I was looking at something completely different. But I know the
Okay.
38% retracements at 5,500. I
Okay.
know that. So that
Yeah.
means, yeah, probably around 51, 5,200. I think you're
Yeah.
probably right.
Okay.
I'm guessing right off
There
the
is
top of my.
another gap here. Okay, so this is the first gap, and this is the second gap. So I'm going to turn the charts over to you, bro, and you could tell us what you're looking at on the yield chart. If
Sure,
you,
sure thing. I was just, spending a little bit of time. We yesterday I was doing the show, the trade-off show with Chris Weston. If you guys don't know, we do a weekly trade-off show, just like Ryan does one with Michael Brown with Pepperstone, and in the UK I do one with the Australian, Chris Weston, the head of research for Pepperstone, and he brought up a term that he wanted to make sure everybody's very familiar with, called term premium. And that is basically what the market is demanding for the longer term duration, fixed income products. And look at the 30-year yield ripping. 20-year, obviously, from yesterday, has failed 20-year auction. And I mean, you can look at the lower end, nothing, right? Their yields have actually gone down, but this inversion that you're seeing with the longer end is really, really frightening. And take a look at the 30-year. This is a trend line that I had drawn for a long time. I mean, you got to go out to this weekly chart and go back all the way to the early 90s. Where were you in August of 1990? I was preparing to join the Marine Corps. I was actually going to boot camp a month later, and that we'd drawn this out, talking about this last year, Dale. I remember having this conversation because we were like, where were you guys in 1990? You know, and you know, we laughed about it back then, but we're breaking that today. Remember, we had this discussion a while ago, like I said, last year, and now we're actually breaking out because we tested it last year and we tested it earlier this year, and now it's actually breaking. That's a little scary, and you wonder why it has the market's attention right now. So you're seeing this move higher in the longer end of the yields. You're seeing the dollar move down, and you're seeing stocks move down all at the same time this morning. Again, This is the sell America trade starting to rear its ugly head. But it's not just a U.S. phenomenon. You look around at, like, the JGBs, they're moving. Look at gilts. I mean, we're getting close to that, the old Liz Truss moment. We're getting right back up to those highs. This is the market is demanding to be paid a lot more money to hold on to longer term duration, no matter what country you're in. So I want to ask the team here, and let's start with Ryan. How do you feel about this with, yields ripping on the longer end across the globe? How are you feeling about this?
Well, it's potentially becoming a bit of a problem, isn't it? Because it's pushing up borrowing costs for one.
Yep.
For everyone, not just the US, not just Europe, not just everyone, and then that particularly for Europe and everyone else. It's coming at a time when growth isn't exactly booming, and that's not a good cocktail, because you need the income from your growth to pay for those borrowing costs. So it's putting a bit of a squeeze on. I mean, look at the 20-year auction, 12 pip tail on it, and look at the difference in rates between the last one. You're getting all this pressure coming in. The question is why? Why all of a sudden is the market or people worried about this? Now, is it down to US deficits? But, why is that a problem? The same problem in Europe? Is it a global viewpoint about deficits and debt and the levels of debt and whatnot?
Yes.
Going on?
Yes, it is.
It is. So, okay, so what's the solution then?
So there could be sovereign debt crises around the world. Could start in Europe, flow to Asia, start to, with what Steve was talking about. That's only just beginning. That could be a problem. And we already know we have a problem here. I guess the big, beautiful bill passed, right?
It's on its way, isn't it?
Huh?
It's still on its way, I think.
It's moving
Okay.
along.
Okay. All right. Anyway, that's right, Brandon. Goes to the House now. Okay, so more deficit spending right after a downgrade. It's, that's like getting a speeding ticket, and next time you go out speeding, you also have an open container in the car. You know what I mean? Huh?
How come I feel like you've been there, Dale?
Me have an open container?
How come I feel like you've been there?
I don't
man.
know.
All right.
Yeah.
Well,
I had angels looking out for me. I don't know why, but here I am with all my open containers.
You made it. You made it.
Made it,
but
man.
You're right, Dale. I think you're right. And this is a really, really, you can see the markets are taking heed of this. And we were just in the Forex Analytix chat room. Wuju was talking about this bear flag developing in NASDAQ, and now NASDAQ is cracking lower. This is a bear flag that Wuju was talking about. And
Nice.
Yeah, it's ugly. I mean, this is, half an hour ago, where he was like, hey, look at this bear flag pattern. And this is what it looked like. And now you can see the aftermath of it, and guys, I think we just have to be really, really sensitive to this. And like I said, we have a tips auction later today. I think it's at let me pull that up. Maybe K-Man knows exactly when that auction is. He probably does. He's always good on the calendars here. But yeah, let me see if I can pull that up.
Just while you're pulling that up, the question that you need to be asking, everyone needs to be asking, is what is the market doing? If it's selling bonds, selling stocks, selling the dollar, where's the money going? That's what
Cash.
you need to
Well,
cash.
yeah, it is, but it's not going into the dollar per se, and that's the difference, right?
So where is it going?
Well, people are like, where do I put my cash? Do I put it into dollars, or do I actually diversify a little bit into the euro, or a little bit into the sterling? I mean, notice the sterling,
Or-
even despite the PMIs this morning, sterling's not far off from breaking out.
Or emerging markets. Brazil has been doing well. In fact, the bond markets from some of these emerging markets are thriving during this move.
Yeah,
that's
you're
what some
right. And look
banks-
at the
Yeah,
peso.
That's what
Yeah.
some banks were saying as well.
Yeah.
Yeah.
So
And gold.
And gold, yes.
Yes.
Gold. Gold,
Yes.
yes.
By the way, that tips auction is at 1 p.m. Eastern.
And Bitcoin. And Bitcoin.
And friggin' Bitcoin. Yes,
Yeah.
you're right, Dale. And Bitcoin, gold.
That's why
Bitcoin.
it's important. You have to know where the flows are starting to go, because that gives you a bit of insight of how you need to trade certain things. If the dollar's getting sold generally, then you got to be careful if you want to be long the dollar. Yeah, the euro it's not going down, but it's not going up either massively, so it looks a bit neutral. So you just got to look at you got to stick your finger in the air and see which way what wind's blowing and how hard it's blowing, because that helps you with your trading.
It's kind of like Ryan and I driving down the road together. We got the windows down and he farted. Same type of thing. Yeah, that's kind of what it's like. It's kind of like smelling that. Just kidding, Ryan.
Blake, your Apple puts should be starting to work pretty good if you held them.
What's that?
Your Apple puts should be working pretty good if you held them.
They're
Apple's
September's and I still have them. Yes.
All right, so Apple's the weak sister of almost everything out there. It had the weakest rally. Look at that. I mean, when other markets took out the previous high, like that high you had in April,
yeah,
and
everything else
Apple,
is way up here.
Right. So
Right.
you have some relative weakness there. And I think I might have a 3-drive working for me now. I'm short Uber. So get out of that car.
Yeah,
Don't
you know
stay
what?
in,
Get out of that car and get in a Waymo. Everybody around here takes a Waymo. No, you ask my wife. She's like, I'm sick of driving and riding in cars with weird Uber drivers. I'd rather be in a car not with anybody.
so she's taking those.
Oh yeah, everybody takes them around here. I take it.
Wow.
I take those Waymo. It's a little weird. Yeah, it's it is a little weird. But
do you talk to the robot at all?
No, but I've actually tried to grab the steering wheel once. Anyway, so guys, we have just 2 minutes before the weekly unemployment claims come out. K-Man, just real quick, I didn't get to hear from you as far as how do you feel about this move in yields and what happened with the 20-year yesterday as I'm getting ready for this?
Well, I mean, Wallet told us that they, like the Bank of Japan, are probably not going to stand in the way of too much. He said that the Fed is not going to go to the primary auctions, which they usually don't. But yeah, what do I think about it? I don't think we're in panic stations yet, because remember that we went up to 5% not that long ago in the US 10s. Of course, the longer end could start to be a bit, let's say, tense. But for as long as the perception in the market is that whatever happens, even yesterday, I don't know, I don't recall who said it, that they would have 3% growth to pay for all the fiscal deficits that they're going to create more. I think the market is in doubt, and if you're in doubt about those kind of things, I think the scenario that we have seen right now, I'm not so sure about the other side of the dollar, because if we get a debt crisis, a lot of other countries have piles of dollar debt, so they will be affected as well. But I think we're roughly in the same scenario as we've been seeing since the tariff announcement.
All right. Well,
It just could get just increased even.
look, we're not moving again. 220. I mean, these weekly unemployment claims
Forget it.
they it's that they don't move. They
No,
don't move.
Forget it.
Just crazy. Crazy. So thank you for your thoughts, K-Man. Appreciate it. And it's going to be an interesting market today. I would not be letting your guard down today. Things are moving, and there's not data that's, well, we do have US PMIs a little bit later. I'm Brian, I'm not sure if you talked a little bit about the Eurozone PMIs, but they were a little weaker. UK PMIs, I think it was the services PMI came in a little weaker. What came in below 50 today that was like a little alarming to
Most
me.
of it. Most of it's
Well,
either
most of it, right?
50 already or heading there. There was some marginal gains. You can see UK services went up to 50.2 from 49, but manufacturing backwards. Europe all little improvements, but still all contractionary. So yeah, there's nothing booming in Europe at the moment, particularly.
Yeah. All right. Well, yeah, nothing booming. Well, we'll see if it's going to be booming around here in the US as well, because we will have US PMIs due out in about an hour. So just well, it's actually an hour and 15 minutes. So Steve, good to hear your voice. Thank you for your thoughts on Japan. Dale, I know you have Carly here, so
Yeah.
I'm going to pass it over to you guys.
Okay, just have one warning for everybody. If you get invited to visit President Trump in the Oval Office, be careful, because it's almost like there's a guillotine in there. Anyone that comes in there. Yeah, that South African president there yesterday, and a video was played about genocide.
Yeah.
And then you had Zelensky about a month ago getting, yelled at by Vance and Trump. He likes using that room as a bully pulpit for sure.
Yeah, in the public view, which is
I tell you what, I can't remember anything like this before. Anyway, don't go. Okay, don't go. Let's get Carly in here so we know where to go. Carly Garner is very well known. Kramer uses her work. She's on every financial station with her charts and technical work, and it's great to have you back, Carly.
Thanks, Dale. Appreciate it. You ready? Should I share my screen?
Yeah.
Okay.
You can share the screen. I was thinking about you once gold made a new high.
Oh man,
I made some attempts there too. What's in the playbook?
Well,
Now.
let me just get to be 100% honest, we're pretty skinny right now. We've kind of peeled most of our positions on. We have a couple stragglers that are struggling a little bit, but fine, I'm not worried about. So we'll talk about some of those. But I'm not, honestly, we're mostly on the sidelines and waiting for the fireworks so that we can hopefully get something done at some good pricing. I've got the 10-year note futures monthly chart up here because you guys were discussing that. So I just said I'd start there. I'm not going to, you guys kind of covered all that, but I will just say it's really important to put things in perspective. Obviously, everything in real time, everything feels dramatic and scary and big. But if we look at a monthly chart, we can see the 10-year note future. And even if you look at the yield's a little more dramatic than this, but we've really gotten nowhere in 3 years. We've just been trading sideways. The real tough market was back in 2021, 2022. That was just a complete free fall. I still have PTSD from that. So if we're talking about investing, not trading, which is a whole different thing, me and my personal investment accounts, I'm buying as much as I can. I'm buying duration.
Are you staying at the 10-year, or are you going further out?
Going further even. And I think in the short run, I probably feel some pain in the short run, but I'm not worried about it. The way that I'm looking at it is the US has its problems, obviously. I'm not here to defend any of those, but when I look around to, anywhere else. We are the least dirty shirt in the hamper.
Here we
You get a
go again.
higher, you gotta get a higher yield and less risk. I mean, there's a 99.99999% chance you're probably going to get your principal plus your coupon payment back if you just hold on to the bond forever. I think it's a good deal. 5 or 6,
Okay.
5-ish%, I'll take it. As a trader, we did try to buy futures a little early in the 10-year note, but we are also long a put. So we have like a synthetic, and we're just planning on riding out. I honestly think we could see as low as 105 in the 10-year note, which would be pretty big drop
Yeah.
just from here. But we have a put, so I'm not going to sweat it out. We'll
Because
just wait and
TLT
see.
has already taken out the lows from 2023,
Yeah,
right?
the
And the
TLT is a
notes
little
haven't.
different.
Yeah.
Right, correct. So
Okay.
we're just waiting. We'll take our medicine in the short run, and if
Let
we're
me.
talking 3 months, I think we're higher.
Okay.
Mhm.
Do you think that a stabilizing dollar, and I don't think we've seen the lows yet. Some people think about it, but I'm thinking
Mhm.
96 ish in
Mhm.
there, and we get that would at least complete wave one down. That a bear
Mhm.
market rally in the dollar would help the notes and
Um,
bonds.
yeah, I don't think it would hurt. I think what we're experiencing now is people are people are transacting not because they want to, but because they have to. So if we're talking about notes, um, there's a lot of things going on, but there's basically a sell America trade where, all this
Yeah.
money flowed into America, now it's got to go out, and it's kind of indiscriminatory. They're just selling it they're just selling, and then they'll figure it out later. And I think what's going to happen is once they pull everything back, they're going to realize grass wasn't greener on the other side, and maybe that wasn't such a bad situation in the first place. That's my opinion. Um, it also with the Moody's downgrade, probably a lot of mutual funds or even overseas buyers probably have stipulations in their prospectus where they have to have certain percentage of certain grades, and so I'm sure that's part of it as well. So it's probably some forced selling, to be honest, and it may not be done because when these types of things kick into play, and I will point out one more thing, most people don't think about this, but I do because we're a futures broker. The markets, when they pick a direction, they press it into expiration. So tomorrow's expiration of the June options for Treasury futures. And then the week after, we're talking about first notice day for Treasury futures. And generally, you get a real big price squeeze going into that in whatever direction the market's going. So I suspect that's probably what we see. So we're probably not done selling off, probably get some sort of last hurrah hoopla here in the next couple of weeks. And then I think it's going to be maybe a generational buy. Who knows?
Well, I know that there are some cycle groupings early to mid-June
Yeah,
that I'm looking at. So
that would
okay,
make sense.
so
Okay.
long treasuries, and you might be early, but you don't care.
That's right. And like I said, we're long puts as well. So if
Okay.
no harm, no foul. If it keeps melting down, it's not pretty to look at on the screen, but we're protected. And we might even we have September futures and September puts. If it gets bad enough, we might look to take a profit on our put and maybe buy something short dated so that we swap our intrinsic value for extrinsic in a smaller amount, but that'll be down the road.
Okay.
So this is the dollar index. I'll just go briefly because you guys covered that very well. I agree. I don't think I'll first point out Trump 1.0. I think I showed this last time I was on here. The last time Trump was in office, we dropped from 103 to 88. So, and the exact same trend line reversed the market here. Started a little higher, but I think we're looking at probably 92 to be honest. I think we go back to this trend
Wow.
line. So Trump 1.0, we've traded between these two trend lines, and the same trend lines I think are going to come into play. How it gets there, it's not going to go straight down. It's not going to be easy money or anything, but I think that's the big picture. Okay, let me go to
Okay.
something maybe you haven't talked about in a little while. This is crude oil.
I'm in it. Can you get it to
Oh,
80?
well, I think we're going to 52, 48, somewhere in
All
there.
right.
So
All
eventually
right.
we'll see 80 again, but I don't think it's going to be
All
before we
right.
see the 40s.
All right.
So there's obviously a lot of fundamental things going on. Iranian oil probably comes back online, but I think the big story is the OPEC put was removed. OPEC's worked really, really hard to keep oil above 65. This blue line is 65. For
Yeah.
years, we held 65. Speculators got in the habit of buying at 65, and OPEC defended it. They've decided, forget that. They're giving up too much market share. They're not a charity, so they're starting to hit the gas. And we're seeing demand probably pull back a little because of all the uncertainty with tariffs and all these other things that are working its way through the system. So my best bet, my thought is 65 was the floor for 3 years. It's probably going to be
Yeah.
the ceiling for now, unless we
Yeah,
can
it's
get over
failed there
65.
twice.
It
Failed there,
has.
yeah, around 60. Well, I mean,
Yeah.
depends how sharp you draw the line. I
Yeah.
have it like at 63, but
Right.
yeah.
It's a little
But
messy is with the continuation charts and stuff, but
what if
correct.
it
If
got
it,
above that spike high that we
okay.
saw yesterday?
So
then what?
if we start trading above this line, and again, this is an art, not a science. 65 might
Right.
mean 64,
Right.
depending on, but
It's a
if we
mattress.
it is. If we start getting up above that, I would say this line's probably gonna keep it intact. So we're talking that
Okay.
probably comes in around 73 at this point.
Okay.
I need to update that, sorry. About 70, 72, 73. So that's possible. Probably going to take some sort of news shock for that to happen. But even if that does happen, I think the big picture is we're going to
Lower.
grind lower. Yeah. Last time Trump was in office, and let me pull up a monthly chart. This is monthly. I've shown this on here a few times, and we just keep going over it again. But last time Trump was in office, oil spent most of its time below 65. So while we think 65 feels cheap, it's actually maybe not so cheap. But that was kind of a neutral-ish price. We got
COVID.
obviously much, much lower. Yeah, COVID's an outlier, obviously, but reality is 65 isn't as cheap as it feels. And in fact, I think, like I mentioned before, I think we're going into the low 50s, maybe 40s. And I'd probably be a bull there. If we got to the 50-ish area, I'd probably turn bullish. And I haven't been bullish in years in crude oil. So it'd be kind of it'd be a pretty big switch for my mental situation. Okay, let's look at something else here. I'll also look at natural gas since we're in energies. Natural gas, the big story is AI, energy usage, LNG exports, and I think all of those things are going to keep natural gas bid, but I don't think it's going to, we're not talking $7, $8, $9 natural gas. I think those days are really behind us, at least unless something really out of, I mean, you have to keep in mind to get to $10 in natural gas, we have a major global pipeline sabotaged. That was a lot of things that's probably not going to happen again. But I wouldn't be shocked to see natural gas continue in this range. So if it gets into the $3-ish range, it's probably a pretty good buy. In fact, we're looking at a place to buy here in the next couple of days, and with the target of somewhere in the $5. So keep your
Yeah, it's a nice
expectations
trade.
intact. Yeah, it's actually been a pretty well-behaved market recently, which is nice.
How are the options? Are they liquid?
They are pretty liquid. Now it's tricky because there's two sets of options. There's American options and European options, and most people don't even realize there's two options listed. So same expiration, same strike price, different market, different exercise rules. Stick with the European. So when you pull up your brokerage account and you start looking at natural gas options, make sure you're looking at European because they're at least 20 times more liquid. Like it's a huge, huge difference.
Okay. Okay.
But yes, they're very liquid. 24 hours,
Okay.
23 hours a day, they're liquid.
That's interesting. They
Yeah.
never used to be.
Correct.
You have a view on gold now, Carly?
I do. And my view hasn't changed. It's been very, very noisy. Oops.
Yeah.
Very
Noisy and parabolic like a rocket.
Yeah. Look, I'm not gonna lie. We had some trades on that took quite a bit of heat. We ended up working out of them. It ended up not being that bad. We're looking for a place to get back short. I think this is, in my opinion, this is a blow off top. Did it go higher than I thought it would? Yes. Do I think that changes the bit, what happens in the next year or so? No, I don't. I think this is a repeat of what we saw in 2011. And I mean, I don't know if you've talked to people around, but I haven't talked to a single person. I mean, retail trader,
No one's bearish gold.
Fund manager, nobody's bearish. Even like my mom and my aunts and uncles are asking
Oh,
about
well,
gold. So
that's a for sure sell.
exactly. I mean, this
When mom
market's
liked it.
toast. Right. Exactly.
I've
Yeah.
seen numbers like 2,700. So
Yeah.
and then maybe 25. So
I
your numbers are a little different than
Yeah,
others.
now this is a monthly chart, and we're not talking, it's not going to go straight,
Yeah.
even if I'm right, and I might be wrong. But even if I'm right, it's not, it's not going to just be a straight line, and it's going to take a long time probably to get there. But I think we fully basically round trip that breakout that we saw in 2024.
Yeah.
A lot of people, they act like I'm completely insane when I throw these numbers out, 2170, 2000. We were just there a year ago. It's not markets revert back to where they were a year ago all the time. We just saw it in the stock market. It seems impossible in real time, but it never is.
Yeah.
It happens way more than you think it would.
Reversion
And
trades.
it does, yeah. And when everybody and their dog is long and bullish, and I went on another podcast and talked about the idea that maybe gold prints into the low 2000s, and I literally was like, people were calling me derogatory names on Twitter. I mean, it's crazy. People are really emotionally tied to this, so
Yeah,
probably
no
done.
matter, yeah,
It's probably done.
any position that they have, they're like that.
Yeah, that's true.
How about S&Ps, Carly?
Okay.
Was April the low? Tough call.
Yeah, it's tough. I think we have a pretty good chance of making a new low, a slightly new low, like somewhere around here, somewhere around 40.
45.
40, 45, 43 is possible if we go down. Let me spread this out a little bit. I was thinking more of like this 200-week moving average, somewhere around 47.50. We were almost there
Yeah.
on that sell-off. That was so quick. I mean, obviously we all experienced it. It was so fast and so quick. And I think it was just the futures that got here. I don't think the cash market printed down in the 48s. And it just feels like we weren't quite done testing those levels. I think we go back down one more time, but this is a tough market. Just to be for full disclosure, when volatility was really high here, we put on a put butterfly because the vol was so high. For $1,000 you could get a really wide spread. I think it was like a 300-point spread. So we had massive profit potential for only $1,000 risk. And we tried to get cute and adjust it by buying our short puts back and then selling a call to replace that premium. And we kind of took a little heat on the call. It's looking fine today, but
Yeah.
probably tried to get too cute. But this is a tough market. I've never seen anything quite like this. I've seen a lot of markets. This is a really wild one.
Down 20% and then recover 18% in a month.
Yeah. A bull market and a bear market. Yeah, it's silly.
All within a month. Yeah.
Yeah, silly.
One of our attendees is asking if you would please show Bitcoin if you have anything on.
It's
If you
been
don't,
so
that's
long.
okay.
I don't think I do.
Okay.
I don't.
Well,
I don't really follow them.
We tried, AJ.
Sorry.
Okay. I can't. Okay.
This is
What
the
else?
NASDAQ. This is the
Okay.
NASDAQ. If you want to take a peek at this, it's pretty similar. It's hard to fit this chart because it goes back so far. So I'm just going to do basically the NASDAQ. We don't follow this as closely as we do the S&P, but we watch it just for like directional, especially because it's been kind of driving the market. But
Yeah.
NASDAQ needs to stay above 18,750. That's the long-term trend line. In my view, we had no business breaking up above it. We stayed there for several months. Now we're back above it. I don't think that's going to hold. I think we fall back into the line, and it might be the interest rate squeeze that kind of pushes us back into a more natural trading zone. The reality is this is how the NASDAQ should behave. This is a normal market. And then once we got all the COVID stimulus, it started doing things like this. That's really not healthy or natural. It happened. The market's always right, but there was some weird underlying things going on there.
Okay. Someone's asking gold silver ratio. Are you following that for any tells?
I do follow it, and it's obviously extended. So the kind of the consensus is that silver needs to catch up with gold.
Right.
But I think that's the wrong way to look at it. let me see if I can find this chart here. Nope. I'm not going to waste too much time looking for this one particular chart,
Okay.
but maybe I can find it. Well, I'll just go back to silver.
Okay.
So my thought is like in 2011, it was silver that took off for the races, and everybody said, well, gold has to catch up because the gold to silver ratio is off.
Yeah.
Gold needs to rally to catch up with silver. And the exact opposite happened. They both sold off. Silver sold off more than gold. So the ratio came back into line, but it wasn't because the weak metal caught up with the strong metal. It was the strong metal gave up enough
Yeah.
to get back down to the weak metal. And I think we're going to repeat that. So I don't think silver catches up with gold. I think gold rolls over and they both go down together. Silver maybe doesn't give back quite as much, but I think the ratio comes into line with the metals sell-off, not the other way around.
Okay, I'm getting one more request, and it says,
Okay.
Dale, looks like Carly follows yen.
I do. Oh, I do
okay.
have a Bitcoin chart. You can see how closely I follow it. I just noticed I had it labeled there. That's my Bitcoin chart. I don't look at
Okay.
it.
Yeah.
Okay.
We have a throwover. Go ahead.
Yeah. Okay. So the yen, I do follow the yen very closely, and obviously there's a lot going on with the yen. It was the carry trade in August that triggered
Yeah.
a bunch of chaos. We're getting back to where we were in August, but the market's adjusted and we're a little more prepared for it this time around. But eventually, like if the yen keeps creeping up here, I think it's going to start putting pressure on things. And I think we're seeing that's part of what we're seeing in the interest rate market is the unwinding of the carry trade and these sorts of
Yeah.
things kind of working their way through. So I actually think the yen's bottomed. I think we're probably going to go a lot higher than the BOJ wants us to. So my
Okay.
first target's
So
about
that
80.
means
Yeah.
So that means even though JGBs are exploding in yields, kind of like what's happening here,
Right.
the dollar's weaker despite higher yields, and the yen will be weaker despite higher JGB yields.
I think so. So this is a futures chart, just to clarify to make sure everyone knows what I'm looking at. This is a futures chart. It's the inverse of
Oh,
if you're
okay.
looking at Forex. So it's a little bit, it's confusing.
Yeah.
And as a futures broker, that's what I do. One
Yeah.
thing that I find very interesting is the yen peaked here. Yen was the strongest it had ever been during the heart of the financial crisis because the yen was seen as a safety currency.
Right.
But I'm thinking we're probably getting the exact opposite of that. Like we're in peak euphoria. So we're not in a financial crisis. We were in the opposite. A few months ago, it was, the golden era and this and that, and everything was roaring. And that's probably when the yen bottoms. And so I think we're in this big decade-long cycle of yen probably bottomed, and we probably go up from here.
Higher yields, higher yen. That correlation.
Yeah.
Okay. All right. Where can people find your great work besides all the television and financial stations that you're on?
Okay.
And Carly does futures options. I'm sure you've gleaned that by now. So
Right.
she's obviously a risk manager. As you can
Yes.
tell, she covers her position with options.
Well,
so that if she's
yeah.
to a degree.
Correct. And because I've learned my lesson. My personality doesn't fit for futures trading. Like it stresses me out. And so I try to I put together strategies that don't stress me out as much. Then I don't make bad decisions, or I still might make bad decisions, but I'm not as prone to it. So that's the goal. And so we offer our clients commentary, trading ideas, things like that. We are a futures and options broker. We only deal in futures and options. You can find us at decarlytrading.com. And we're a teach as you go type of brokerage. So if you feel lost at first, don't worry. We're going to walk you through it.
Okay, and there you go.
Yeah.
Check out her free commodity newsletter and her ideas. And if you're interested in futures options, here you go. You have someone that's going to actually give you full service. Okay.
Correct. Yeah.
Instead of you just clicking the mouse and hoping.
Right. We do offer online trading. So a lot of our clients are clicking mouse, but the difference is they know they're going to get information from us and they can call or email and we're going to answer the phone. It's kind of an interesting concept.
So if you still like trading with human beings
Yeah.
while it lasts, give Carly a call.
Thank you,
So All right. So thank you very much, Carly. Great to
course.
see your charts again, and hope you have a great summer. We'll talk probably in August, see how things are shaking out.
Let's do it. Thanks for having me.
Carly Garner, everyone, and you can follow her on X at Carly Garner, right?
Yep, that's correct. At Carly
Uh,
Garner.
Yeah, at
Yep.
the minimum, follow her on X. And Laura's saying you're always interesting to listen to, and John's thanking you. So remember,
you.
don't just count your charts and your candles, count your blessings. And I'll see everyone tomorrow. You can join the team in 20 minutes on the Morning Edge. Adios, everybody. See ya. Thanks again, Carly. See you, Marcus, John.